Alright, perfect. We are going to go ahead and jump into this week's problem of the Quiz Access Chapter 5. We got question 6 here. And it says, Lopez Company reported the following current year data for its only product. The company uses a periodic inventory system, and its ending inventory consists of 600 units, 200 from each of the last 3 purchases. So we've got our table of information here with units, and we're going to go ahead and use an Excel sheet to help us out and explain it a little bit better. So first off, we've got the specific identification. So we will go ahead and calculate that. So we've got our cost of goods sold and our ending inventory. And so I started off by going ahead and putting our cost of goods sold, our ending inventory of 600 and 200 from each of our last 3. So we've got the last 3 purchases here of each 200, meaning that our first 2 were both 0. And I added and I put in this column here the price for each of the units sold. And in this column, I went ahead and, as you can see here, I did equals E4, which is going to be this one here with F4 and that one there, or times F4, I should say. And just pressed enter, and it got that 0 value, and then I just clicked and dragged it all the way down. And with this last one here, as you can see, I've got the sum of G4 to G8, so just here down to here, and that is going to be our ending inventory value. So we can go ahead and just punch that in right there of 4,440. And to figure out the cost of goods sold, we took our number of units here and we subtracted 600 because that was our ending inventory, and our cost of goods, or the unit number of goods sold, was 3,500. So we came back here, put 3,500 in here, and then had to calculate that up according to the 200 taken out of this month's payment on the July 28th purchase, as well as the October 3rd and the December 19th purchases. So we took each of those, we put each of our inventory items from our unit numbers, I should say, from this column here. Ooh, doesn't quite work the same. But we took 300 units, 640, and then we took 1,220 minus 200, 1,160 minus 200, and 720 minus 200. And we put each of those here in this column here and did the sum of all of those. We then put the prices again, did our multiplication, this time of this cell times that cell, and did kind of a copy and paste in all of these cells, and added them all up, and we got 23,976 as our cost of goods sold. So we came back here, punched that in, 23,976, and we've got our specific identification figured out. The next one was our weighted average, a little bit easier to figure out. We took our units from the 4,100 units and the $28,416 value. and we did 28,416. And in this cell we did 28,416 divided by 41, and we got a rounded number of 6.93. And then in this column, I went ahead and took the value of B9, which was 3,500, and I multiplied it by 6.93, and that was our cost of goods for the average, and for the weighted average. And our ending inventory, I took the 600 from right here, multiplied that by 6.93, and our answer for that was 4,158.44. So we punched both of those in 1,158.44, and as we can see here in the red, do not round intermediate calculations and round your answer to the second decimal place. So we just did to the second decimal place here, as well as this one of 24,257.56. Our third step was to figure out the first in, first out method of working with it. So I did kind of the same thing from our specific identification, where I punched in put in all the units, but with this one I started with the 3,500 in this column, and in the column right below it I put the sum of B17 to B21 so that I could track how much I was putting in or taking out from this effect. And so we did the first in, first out, meaning we sold this one for 300. Sorry, we sold this for 640. We sold this one for 1,280, and we sold this one for 160, and that left us, if we just put a 0 in there, that left us with about 3,380 to calculate into our cost of goods sold for the units. And so we remembered that, so we can see in the problem that our units was 4,100, but remember we have the minus 600, so our total is supposed to be that 3,500. And in the month of December we purchased 720 units, and so here we can calculate we only need about 120 units left to get $35,000. So here we punch in 120, enter, and you get that 35,000. And then we did put in our prices again, did the multiplication of this unit times that unit, and we got each of the cost of goods sold for each of these purchases, or each of these sales, I should say. And then in this column we went ahead and did a sum of D17, so from this column to this column, and our sum value was $23,076. So for our cost of goods sold, on the first in, first out, we put 23,076.00. Then to calculate for our ending inventory, we know it was $600 left in our inventory, and because we had all of this sold, we were able to put a 0 on each of these, meaning that because we sold all of this value, we didn't have any left at the end of that pay period. And then to calculate for this column here, not only did we know that we had 600 left, but we also could come here and take our purchase value of 720 and subtract it by 120, and you get that same $600 value. And to calculate how much was in that, we went ahead, put the prices here. I still went ahead and did the calculation for these inventories that didn't have any in it, just to kind of show that, hey, there wasn't any progress other than this last pay period, and multiplied that, and we got $5,340. So we can go ahead and put that in our first in, first out of ending inventory, $5,340. And finally, to figure out our last in, first out, I did similar to the first in, first out here. I started with the units that were sold and the ending inventory total at the end, but I worked from the bottom towards the top this time. So I put in here, because we had 3,500, we know we sold 720. We know we sold 116, or sorry, 1,160, and that still didn't quite reach 35,000. So we went ahead and put 1,280, and right here, I'll just go ahead and delete these to kind of show you the process of doing this. So we've got 720 for this month. This one was 1,160. For the one right above it, we had 1,280 that was purchased and then sold. And then right above it, see that we don't quite need 640 to completely fill that up. If we do put 640, that puts us over by 3,000. So we know we can just put $340 or 40 units, and that puts us right at the 3,500. And that means that for that first one, that first purchase, we didn't have any units sold. So we came here, put our calculations in, did the multiplication, and added it up, and our total for the cost of goods sold with the last in, first out was 24,741. So we come back over here and we can see right here we have the $24,741, and all we had to figure out left was the ending inventory. So we put in our 600 to start with, or to end with, I should say, and we know that we sold all of these values, so we could put a 0 here. And because we had originally we purchased 640, but we only spent or sold 340. We knew we had 300 left here, and because that was a 0, that was a 300 to start with. So we just had our first two purchases of 300 units in the inventory, which helped us to get that $600 or 600 unit value. Then we multiplied both of those to buy their unit value. The first one at 6 and the second one at 6.25, and we got those minor differences in the price, but together it equaled 3,675. So we can come back over here, punch it in, 3,675, and that completes our first step of the questions A, B, C, and D. But now to figure out the last one of which method yields the highest net income. And as we can see from the cost of goods sold, as well as our ending inventory, the method that will yield